Hello there, welcome to David's Investment Analysis channel. Today I'm very excited to be talking about another special purpose acquisition company that has been requested several times on my channel the last several weeks, and that is Netfin Acquisition Corp, which is planning to merge with Triterras Fintech. Upon closing of the transaction expected in Q4 of 2020, the combined company will change its name to Triterras and will be publicly traded on the NASDAQ with a new ticker symbol. So this one has been announced for some time now, with the letter of intent on June 29 with a definitive agreement announced on July 29th. Following the announcement of the letter of intent, the stock price initially jumped 30%. Since then, it slowly drifted lower to closing today at $10.26. In the next bit, I'll be discussing about Triterras, what they do, and how they earn income. Then I'll look at the qualitative aspects of their business and follow with a quantitative analysis looking at the valuation and financials. Then I'll conclude on whether I think the stock is about its current price and whether I own any shares of the business myself. I do spend a lot of time preparing for these videos, so I really appreciate if you could like and share my video. And when I reach 2,000 subscribers, I will release my top 7 holdings in my portfolio. And if you do not want to miss out on that, please do subscribe and click the bell notification. And if there's any other companies you'd like me to cover in the future, please do leave in the comments below. Now let's get to it. So before I want to go into the specifics of the company, just wanted to clarify the transaction. So NFIN is planning to acquire only Triterras Fintech and its Kratos platform, and not Triterras Holding and its Rhodium platform. The reason for this is the desire to combine with the fast-growing fintech pure play with a 100% fee-based platform and no balance sheet exposure. The decision to combine with Triterras Fintech and expand its tech platform will benefit shareholders and future investors and maximize both short-term and long-term shareholder value. Now let's discuss about Triterras Fintech's business. Triterras Fintech is a leading fintech company focused on trade and trade finance. It launched and operates Kratos, one of the world's largest commodity trade and trade finance digital marketplaces that connects and enables commodity traders to trade and to source capital from lenders directly online. For those that do not know what trade finance is, it is the use of financial instruments and products by the company to facilitate international trade and commerce. Trade finance makes it possible easier for importers and exporters to transact business through trade. Since the launch of the Kratos platform in June 2019, it has facilitated over $6.6 billion of transaction volume with more than 3,500 transactions with $17 billion of cumulative funds onboarded. The company estimates $123 million in fiscal 21 sales, 169% compound annual growth rate between fiscal 19 and fiscal 21, EBITDA margin of $84 million in fiscal 21, and estimated high EBITDA margin of 69% in fiscal 21. Also, Triterras has a first mover advantage, utilizing disruptive proprietary technology to solve critical industry problems. The fintech platform delivers previously unavailable access to lenders and borrowers, cost reduction, risk abatement, and speed. Now let's look at the qualitative factors, and we'll first look at the management team. The founder, chairman, and CEO of Triterras is Triterras, who has over 35 years of professional experience. He brought his entrepreneur and technology experience to the trade finance industry in 2011. Before founding Triterras, Mr. Carneru started and led multiple successful technology companies. He moved to the United States in 2000 and turned around 3 internet companies, which he merged into Lanco Global and successfully exited in 2004. Mr. Carneru then spent the next year developing an innovative and real-world oriented core technology curriculum that was first deployed in his family's Indian-based engineering university with over 20,000 students, and later was used in other universities in India. In 2005, Mr. Carneru co-founded a global IT development and services company headquartered in Atlanta, with a development hub in Hyderabad, India. The software was deployed at multiple Fortune 500 companies. Mr. Carneru grew revenues from zero to over $80 million, and he sold this business in 2010 before turning his attention to the trade finance industry. Mr. Carneru is a Six Sigma trained executive and holds a degree in mechanical engineering from BMS College of Engineering in Bangalore, India. Along with him, he has 2 very experienced executives, John Galani, the Chief Operating Officer, and Alvin Tan, the Chief Financial Officer. The management team appears to be knowledgeable and experienced. I would continue to trust this management team until issues are noted. Now let's look at the industry outlook. There has been several research reports that suggested that the trade finance industry would be growing in the next several years. Looking at this one from Allied Market Research, the global trade finance market was valued at $39.7 trillion in 2018 and is expected to reach $56 trillion by 2026, registering a compound annual growth rate of 3.79% from 2019 to 2026. The development of technologies such as optical character recognition to read container numbers, radio frequency identification, and quick response codes to identify the trade shipments, blockchain, and enhancing digitalization of trade documents drive the trade finance market growth. Also, advancements in technology, switching from traditional banking methods for documentation to ease the paperwork, and efficient enhancement to trade finance industry provide opportunities for the market. In addition, strategic formulation along with the adoption of structuring and pricing tools offer some of the other growth opportunities in the market. Let's look at another report. TechNavio has been monitoring the trade finance market and is suggesting that it would grow by $11.25 billion between 2020 and 2024, representing a compound annual growth rate of over 4% during the forecasted period. We can see here from these two reports that the compound annual growth rate is around 4% annually, which is quite low, but interestingly, Triterras is expected to have a compound annual growth rate of 169% between fiscal 19 and fiscal 2021. We'll see later how the company can achieve this amazing growth rate. Let's look at what the management says about the market. The trade finance market is a $40 trillion market, and the industry is dominated by multinational corporations and banks, and they prefer to finance large 50 million or more trade finance transactions. The market they are targeting is the sub 50 million trade finance transactions that is fragmented and currently supported by hundreds of smaller players lacking infrastructure and technology. The trade finance market is very complicated and complex. It involves several parties like banks, corporations, government bodies, and facilitators. It involves several processes like shipment of goods, transfer instructions, risk mitigation and compliance, financing, and payment. So what kind of problems are there in the current industry? The business model hasn't changed much over the last 200 years, and here are some of the key problems. They are paper intensive, documentation discrepancies because documents are manually handled, resulting in high risk and operation complexity due to human error. Fraud susceptibility because paper documents can be altered through the supply chain and physical products require critical quality assurance. Significant overhead costs because purchasers utilize credible mediators like brokers, private investigators, arbitrators, which increase the transaction costs. Delays in trade finance because banks and lenders have become very selective in funding, resulting in unavailability of funds at required times. Now, where does Triterras see the opportunity? The World Trade Organization estimates small-medium enterprises have 1.5 trillion in annual unmet trade financing needs and have up 60% of their financing requests rejected by banks. Many traders cite the lack of adequate trade finance as the main constraint to their growth and success. Qualitas is actively addressing this problem by joining forces with alternative lenders. On the Qualitas platform, it offers 3 modules with 2 revenue streams. One is Facilitate Trade for modules Trade Operations and Risk Management. It charges 30 BEPS or 0.3% on value of goods traded. And 2, Source Financing for module Trade Finance. And Triterras charges 130 BEPS, which is 1.3% on the amount financed. And it suggests here that it is cheaper than offline arrangement fees. The platform runs on Ethereum blockchain, solving old industry problems such as fraud mitigation, which is no risk of data modification, data tampering. Data is stored in a distributed and replicated chain of servers. Efficiency, faster and efficient trade transactions by using blockchain-based smart contracts, reducing paper and overhead costs. Traceability, availability of trade transaction history data as each transaction is timestamped and chronologically stored in blocks and offering transparency. Secured and trusted trade transaction over the network as blocks are cryptographically sealed in a chain. System availability, no downtime and 24/7 availability given decentralized network architecture, preventing overall system failure. And we can see here that they are the only non-petroleum commodity trade and finance blockchain-enabled platform of scale. Most of the time, management tries to say that they are the only company that does this and that. I'm very curious how the platform really compares to competitors. Unfortunately, I tried to look at main competitors of Triterras and Qualitas, but I wasn't able to. Majority of its competitors are large banks and financial institutions. However, they are targeting more of the small, medium enterprises that can't get financing from the traditional big banks or financial institutions. They have several sustainable competitive advantages. To highlight a few, they have several years of operating experience in the trade and trade finance sector led to design and build out of the platform. Kratos has the first mover advantage in trade and trade finance industry, and it serves segments with high barriers to entry like small medium enterprises and non-petroleum commodities. Let's look at what will drive the growth of Triterras and Kratos. Each party added to this platform has the potential to add their multiple counterparties, and the growth can be geometric. The online transaction volume for Triterras is expected to grow from $3.6 billion in fiscal 2019 to over $37 billion in fiscal 2023. That is more than 10 times in 4 years. The company has 6 initiatives to grow its business through introducing insurance and logistic modules, creating mobile application, offering supply chain finance, expanding geographically, and offering additional commodity products. Let's look at the impact of the global health issue. Kratos' platform is outperforming 2020 pre-global health issue projections. Trade and trade finance activity is increasing, shifting online as a result of worldwide closures. Existing customers are transacting a higher volume of their business online. 70% increase in average monthly trading volumes during the first 4 months of fiscal 20 versus platform launch through fiscal year ending 2019. 2.9 billion transaction volume during the first 4 months of fiscal 20 implies run rate significantly exceeding the 7.8 billion transaction volume projected for fiscal 20. Less liquidity and fewer lending sources are exacerbating the current 1.5 trillion annual shortage in trade finance, creating an even more compelling need for trade finance solutions. Let's look at some of the other risks. The lack of focus on trade financing for SMEs, insufficient risk valuation capabilities, limited legal certainty, and operational efficiencies restrain the growth of the trade finance market. But providing financing for SMEs and operational efficiency is what Triterras and Kratos is focused on, so they should be able to benefit from this. Even though that Triterras is focused on SMEs and the banks and large financial institutions are focused on larger transactions from larger organizations, they can, however, include their focus on SMEs and start to compete with Triterras. And with large organizations, they can spend a lot of money in developing a platform to compete. And they usually have a wider ecosystem providing additional service or bundled services which may attract customers. One of the most important metric for a platform business is the increase in number of users. And if Triterras cannot attract users, they may stop growing. And users may start leaving the platform because their partners do not transact on it. Another risk is with the transaction. It is not yet finalized. The transaction won't be closed until sometime in the fourth quarter of 2020. And the deal would require shareholder approval and subject to several closing conditions. And some deals do fall apart, and if this deal does fall apart, the stock would go back to $10.17, which is close to where the price is today. Now let's look at the quantitative analysis. This is Triterras' fiscal 19 results and their fiscal 2020 to fiscal 2023 projections. Looking at transaction volume, it is expected to grow from $3.6 billion in 2019 to $37.4 billion in 2023. Trade finance volume is expected to grow from $179 million in 2019 to $12.5 billion in 2023. And their actual revenue is expected to grow from $16.9 million in 2019 to $246.7 million in 2023. This represents a compound annual growth rate of 95%, and this is annually and not for the entire period, so these are amazing growth numbers. And the gross margin is between 98% to 99%. These are really high gross margins, and it's because of the nature of the business offering a platform for users to transact. The EBITDA is expected to grow from $14.8 million in 2019 to $177.2 million in 2023. This represents a compound annual growth rate of 86%. The EBITDA margin is expected to be between 68% and 87%. The net income is expected to grow from $13.2 million in 2019 to $143.6 million in 2023. Now let's look at the pro forma valuation. The company's enterprise value is at $674.1 million based on a 5.5 times estimated 2021 sales of $122.7 million, or 8 times estimated 2021 EBITDA of $84.3 million, or 12 times estimated 2021 net income of $71.4 million. $674.1 million enterprise value plus cash of $179.5 million equates to equity value of $853.6 million. With $257.3 million of cash from the SPAC, less $60 million for Triterras' initial investors, less $18 million of transaction fees, leaves $179.3 million of cash for the combined company. The cash will be used to grow its business and provide the ability to make acquisitions. I wouldn't be surprised if the cash is used for this reason because since the market is fragmented. Triterras' initial shareholders will roll 90% of their equity into the transaction. Triterras initial shareholders will receive additional performance earnout of up to 15 million shares upon achieving certain milestones outlined here. Please do note that the valuation here does not include earnouts and warrants. With 15 million shares coming in from the earnout plus 26 million from the warrants and private placement, that equals to 41 million shares possibly coming in the next several years that will dilute shareholders' equity. After the transaction closes, the SPAC shareholder will retain 30.1% of the combined company. SPAC founder will retain 8.3%, while previous Triterras shareholders will retain 61.5%. Looking at comparable companies' valuation, there's no other publicly traded companies that offers a very similar business. Triterras is like a hybrid mix of different companies. This valuation will compare with companies in the exchanges and alternative trading systems, transaction solutions, and financial marketplaces. When looking at the growth and margin, Triterras offers the highest revenue and EBITDA compound annual growth rate of 169.4% and 138.5% respectively between 2019 and 2021, which is significantly higher than all of industry comparables. It also offers the highest estimated 2021 EBITDA margin of 68.7%. When looking at the valuation, it trades the cheapest amongst the group on an EV to estimated 2021 revenue of 5.5 times, EV to estimated 2021 EBITDA of 8 times, and price to estimated 2021 earnings of 12 times. At its current price of $10.26 with performance shares of 83.9 million, provides a valuation of 816.8 million, which is quite close to what its performance reflected. The performance valuation is based on redemption value of $10.17, which is the lowest it can go prior to the closing of the transaction. This suggests that there is limited downside for this investment in the near term, but please do bear in mind that these valuations did not include share dilution from the earnout and the warrants discussed earlier. Conclusion. In my opinion, at today's price of $10.26, I think it's a speculative buy because of the following reasons. They have a strong management team led by founder, chairman, and CEO Srinivas Kannuru, who has over 35 years of experience and is a successful entrepreneur, and is working with a very experienced and knowledgeable management team. Triterras has some amazing projections and is set to grow significantly faster than the industry's 4% compound annual growth rate, suggesting that it will take market share from other competitors and addressing the market shortfall. Triterras Kratos blockchain and Impul platform is a disruptive first mover in trade and trade finance sector with commercial traction and customer adoption. Kratos addresses the 1.5 annual trade finance shortfall by providing new access to both lenders and traders, solving the largest problem cited by many commodity traders. Triterras has several growth initiatives that include introducing insurance and logistic modules, creating mobile application, offering supply chain finance, expanding geographically, and offering additional commodity products. They currently trade very reasonable compared to comparable companies based on management's projections, with 179 million of cash on the combined balance sheet. Based on the price that is trading now at $10.26, there's limited downside in the near term until the merger closes. And here are some of my concerns. Lack of focus of trading financing for SMEs, insufficient risk valuation capabilities, limited legal certainty, and operational inefficiencies restrain the growth of the trade finance market. But providing financing for SMEs and operational efficiencies is what Triterras Kratos is focused on, so they should be able to benefit from this. Trade finance industry growth is expected to be slow at around compound annual growth rate of 4%, even though Triterras is expected to grow significantly faster. The growth potential does look very promising for Triterras, but remind you that these projections are only estimates and can be very different from reality. Even though that Triterras is focused on SMEs and banks and large financial institutions are focused on larger transactions from larger organizations, they can, however, change their focus to SMEs and start to compete with Triterras. And with large banks and financial institutions, they can spend a lot more money in developing a platform to compete. And they usually have a wider ecosystem providing additional services or bundled services which may attract customers. One of the most important metrics for a platform business is the increase in number of users. And if Triterras cannot attract users, they may stop growing, and users may start leaving the platform because their partners don't transact on it. Another risk is with the transaction, as it is not yet finalized and the transaction won't be closed until sometime in the fourth quarter. And the deal does still require the shareholder approval is subject to several closing conditions. And some deals do fall apart, and if this deal does fall apart, the stock will go back to $10, which is somewhat close to where it is today. So it does provide limited downside. Disclosure. I currently do not own any shares of NFIN and I haven't decided on whether I'll be buying any shares. I may pick up a little bit shares at these levels because I think the downside is limited. Triterras has a proven profitable business model with exceptional growth projected by management. And based on the year-to-date results, the management's projections for fiscal 2021 seems reasonable. So if they could meet these targets that they have set, I think the stock could go up a lot higher. Having said all that, I think the stock at its current price is because of the lack of excitement in the industry, and perhaps the business is quite complex and hard for others to understand. But if you take the time to really understand what the business does, I think you will see the potential in this business like I do. That's it for now. I do spend a lot of time preparing for these videos, so I really appreciate if you could like and share my video. And when I do reach 2,000 subscribers, I will release my top 7 individual stock holdings in my portfolio. So if you do not want to miss out on that, please do subscribe and click the bell notification. Thank you for watching. Until then, see you next time.